started on doing our thing, our stilo. And if you have questions, stop me. I'm not gonna roll through this quick, but I'm gonna kind of go. So let's go. Get me? Yes, I love it. Okay. So first of all, this is our agenda tax information for business, starting a business, operating a business, and IRS other federal resources. Again, I'm sure we already talked. You got my experience. I've been there for forever. And we are, like I said, we're starting out with tax information, business, and all of the above. So this is just for new businesses. If you're new and you want to know some of the things that we have available to you, number one, look at our website. The first thing we point to is our website. Our website has so much information for small businesses. It's under irs.gov/businesses. As you can see, we have information on, and I don't know if you can see it well, but we have information on preparing your taxes, filing or paying your taxes, and running your business. Under running your business, it's small, but it's starting a business, operating a business, and closing a business. You can click on each one of those links and it'll take you to information on just how to get your business started and get things going. Now, first of all, let's see. We've got figure out. I'm getting ready to click on everything. Now, under starting your business, and like I said, that was the link you click on. Once you click on that link, it will go to this page right here. And that page, it gives you information on what new owners need to know about their federal taxes. You're operating a business and you want to know if it's a business or a hobby. What does it take to be a business or a hobby? We do have presentations they give a little bit more information. I'm not going to say a whole presentation on business or hobby, but just a little bit more information. We're going to talk about it a little bit more in depth now, but that it goes into things like selecting a business structure, whether it's an LLC or a corporation or a partnership. There's different levels to each one of those. When you click on it, it shows you the type of structures they have available and what types of forms you would file for each one of those structures. So with a business, you want to, this type of resource is very good because if you haven't been someone that is preparing taxes, you may never know, you're not going to know every single thing as a business owner, but you're going to want to know how to find information. And even if you hire someone, and that's another thing, we're going to talk about hiring someone to take care of your taxes. You want to be able to go back and look over what they're giving you to say, okay, this is the information you're giving me, but I've looked it up and this may not match what I think. So sometimes you need to know what questions to ask as well. So that's part of what it takes as a business owner to be able to operate your business. Now, we're also talking about, I told you before, we were going to cover a little bit about businesses versus a hobby. So you've got a lot of different things that cover what makes a business versus a hobby. If you got a business and you look at the how much you're making in the business, is the activity being carried out in a business like manner? Is it just for fun? If you're doing it just for fun, you're not making any money, or you don't even consider the money to be where you're living off of it. That's a big part of it too, because some people are out there, they have something where it could be considered a viable business, but they're making their real money somewhere else, and they consider this to be play money. If you're not considering it a hobby, you're not being a business, and you're not treating it as a business, it may not be one. They talk about the time and effort you take to put into the activity to show that you intend to make it profitable. If you're someone, you have a lot of these little small businesses like Avon and, jewelry sales and stuff like that. If you're not going in and putting in the work to make it profitable, like you see, okay, I'm not making money this way. Let me change it up and do something different. Somebody that's going in to be into the business, to be the business, to have a business, they're going to go in and say, this isn't making money. I got to figure out what I can do. I gotta advertise. I gotta put things out there. If you're somebody that does like online sales and you rely on lives, how often do you go live? Do you go live once a week, twice a week, or do you go live once a month? Are you really trying to make this into a business, or is this something that you're just doing it as a hobby and you just like looking at you like buying lotion, you know? Okay. And whether the losses are due to circumstances beyond your control or are normal for the startup phase of a business. Like if you got losses in a business, you may have losses when you start up a business, like restaurants and things like that. Their first year, they're going to lose money, but they're putting in the work to so that next year is going to be. But if these losses are something that are just because you're not doing anything with it and you just the business is just out there, it may not be a business, it may be a hobby. So, um, okay. And the other part of it is whether you change the methods of operation to improve profitability. We talked about that. Whether you and your advisors have the knowledge needed to carry out the activity as a successful business. Like if you're somebody selling, like I said, the Avon the lotion, and you don't even use lotion, you're just ashy.
So I have a question about that.
Yes.
Because it reminds me of a client that I counseled. So if you have, let's say you started an LLC, but the business is not making money.
Mm-hmm.
And I advised them, and they can take the advice or not, to quit the business
Mm-hmm.
and just continue as a hobby.
Mhm.
They can no longer take the expenses on a Schedule C,
No.
correct?
No.
Okay.
And that's the reason why they have this whole section set up. Each business is different, and that's another thing. When you're looking at it, each business is different.
Yeah.
They've got all these. When you go into the website and you pull up the part about business or versus a hobby,
Yeah.
they've got all of this information listed out like one question at a time because each business is different. You've got some businesses where you got one person selling potatoes on one side. You got another person selling potatoes. Okay, this person that's selling potatoes, not only did they go out and advertise their potatoes, they go in and they also make potato salad. They're doing everything they can to generate income for those potatoes. This other person is over here. They sell potatoes. That's all they're selling. They don't advertise. They just go out, put their cart out every 6 months. And when potatoes harvest, and that's more of a hobby than a business.
Okay.
And when you have a hobby, you can't claim it like that. You're claiming it as income. You can claim that income, but you can't claim the expenses like a normal business would.
Got it.
Oh, okay. And like I said, you've got all of those questions, and like I said, the IRS has a lot of resources that can help you figure out whether it's a business versus a hobby. They also look at certain, and I can't say exactly how many times you can claim losses and all of that stuff for a business, but I do know that you after a while they will look at it and say, okay, is this really a business? If you're claiming losses and it's been whatever number of amount of time, we want to see exactly what you have. And I think as a matter of fact, I know the publications, and I'm looking back at my publication, it's not in here, but it's in the publication for the Schedule C and instructions for the Schedule C and for the publication, I think 583 for starting a business has information on the timeframes or how long you, it might be in the circular on the timeframes of how long you can claim a business, expect, losses for your business. But it's a certain point when you're looking at the business and you have to be realistic. A lot of times people are not realistic. They will look at it and say, oh, well, it's going to be okay because this is the dream. But if the dream isn't you going in and doing the work, if you're not going in to make the business happen, and ultimately, if it's just not successful, you got to learn how to say, okay, this is a good business versus this is maybe something else. And it's not really a business, it's a hobby. Because you can love as much as you want to doing what you do, but if you're not making any money from it or you're not getting a profit from it, at a certain point, it's not a business, it's a hobby that you just love.
Yeah.
Yeah. So moving on from there, we have selecting a business structure. Now, And this is so small, but this is the screen that you come in when you click on that business structures. And underneath there, they have all the different types of structures. So proprietorship, partnership, corporation, S corporation, and LLC. Now, a sole proprietorship is is where you are just taking everything on your personal side. You're the sole person. There's no one but you. You'd have not going in and created an LLC. You just got your income on your Schedule C, your 1040, and you're filing it like that. That is a sole proprietorship. Typically, with a sole proprietorship, you can have employees, but once you start having employees, you have to have a tax ID number. You do not have to operate a business and have a tax ID number. It's not a requirement, but if you are going to get a tax ID number, please do it for free. The IRS has people go are I've had more than one occasion where I've done presentations and the person was like, I had to pay for it. No, you did not. The person you were charging you for the idea of just getting up, getting on there, and maybe they were doing something else, but the EIN is free. They can do I think it's like 8 or something like that on our website, but an EIN is free daily. So you can go in and EIN it up. Now the problem is you start opening up all these businesses, you got to figure out how to get the paperwork for that straight. I'm just saying. Then you have the corporation, which is well, let's go back to partnership. Now a partnership is where it's two or more people, where you're not where you're claiming the income just as a partnership, and each person is pretty much liable for that partnership or whatever. And your whatever your person, one of your partners does, you're liable for that. As a sole proprietorship, you take everything on yourself. But in your decisions are your decisions. But when you have a partnership, your decisions and your partner's decisions are what make this business. So if you don't trust the person, if you get into business with someone else, I will say that think of it like a marriage, because you're going to be that person is going to be riding with you on this business journey, and it's possible that they make a mistake, it comes back and affects you. Corporation is where they have it set up through the state, and S corporation similar, they come up through the state, and the limited liability is where it's set up through the state statutes. But with the corporations, you have documentation that goes with those, where you are setting up all the corporation has the all the requirements with it. The LLCs don't. LLCs have less information. Like for example, when I would go in to look up a business at the state through the state, because you can go through the state corporation commission and look up a business. They always have the partners listed with the corporation. LLCs were not required to. That's why right now they are requiring a lot of these businesses to start off, and that's something that I'm not going to get deep into, but that's beneficial ownership information. I know you've heard about it because everybody is talking about it. They are requiring now because they want to know who's owning these businesses. You have a business that's owned, you got one social security number on there. That person is saying they're not even involved with the business. They want to know who's involved with these businesses that are being owned. That's why they have the beneficial ownership information. But back to this, because that's another presentation that will go through another area, not the IRS either. The IRS, although we are kind of monitoring it and everything like that, it goes through, I think BACA is the one that's doing the beneficial ownership. Yeah, it's the but it's not the other organization outside of IRS. We actually have done presentations with them, but the Vincent. I keep on saying Vincent and Vincent. But FinCEN are the people that have it, and they're the ones that are actually regulating it, the requirement. But the IRS is kind of like in the background waiting, because we are sort of like the ones that need it. But we're not putting ourselves out there to say we're monitoring it. It's FinCEN. And okay, so now let's look at the business structures again. When you go in and click on, okay, let me go back. When you go in and click on any one of those, sole proprietorship, partnership, corporation, S corporation, if you click on one of them, let's say we got the S corporation, it gives you all of the filing requirements for that S corporation. They have for your income tax, you file in 1120S, and you have the K1 with that, and then they tell you what kind of instructions are available for that. And estimated taxes, they say you can do the 1120W for those, and then for employment taxes, 941s, depending on if you're a regular or if you're a farmer, 943, and then the 940 for unemployment taxes. And it goes into even more after that. So you can click on each one of those and they'll have a whole screen. I'm just giving you a sample, a portion of the menu today. So there you go.
It's laid out really well.
Yeah, and the website gives you all of that, but that's why I said I'm giving you like the sample portion. When you go in there and look at it, you can see each one of those things where you click on it and you go to it and see what is set up for each structure. Okay. And now, remember I talked about EIN, free. Okay, so so they also have, if you go in and you click on, now this is the small business and self-employed area. If you go in and search for small business self-employment, or it's just small business, you're going to get Small Business Tax Center. That was the initial page where that irs.gov/businesses is on. But on the side of that screen, you have small business and self-employed, you have employer identification number. You can click on that employer identification number and it's going to give you all the information you need to know about if you're even required to have an EIN, because a lot of people are not. They're just running a small business, but as you grow, you're going to need one, you know. And especially if you have employees, you could be small and just have, 2 employees, but you need an EIN because if you have employees, you have to have an EIN. Okay, so they give you the whole thing of what defining what do you need as far as an EIN. Do you need a new EIN if you already have one? And then other questions about whether you canceling your EIN, getting, what do you need for your EIN, who's responsible once you do all of that. But then you see that big blue box at the bottom, applying for an EIN. Click on that and there you go. Easy smeezy and free. Um, free. Okay, so we move on. And I'm just going to show you what the applying for an EIN looks like. They give you all the information about eligibility, understanding your online application. When you clicked on that blue button at the bottom of the other screen, and it pulls up all, like I said, all of this information, and don't have to click on that blue button. You can also just go to irs.gov/EIN, and that's your application for applying for an EIN. It gives you all the steps, and then you go to the bottom because they give you enough information to gather. You go on the bottom and click on applying for an EIN. Getting an EIN is fast, easy. The hours of operation are Monday to Friday, 7 a.m. to 10 p.m. Eastern Standard Time. And you determine your eligibility, you go through the process. It usually can take you immediately. They will give you your EIN immediately, but I'm just kind of going over it. When you get it, you would want to print it out as soon as you have it. You have to complete it in one session, and you're not able to save it and return it at a later time. It usually expires after 15 minutes. So if you get on there and you're trying to apply, you got 15 minutes to get it together and move forward. After you submitted your application, like I said, you can get it right on screen. You want to print it out and keep your EIN. You can get your EIN if you've lost it or something like that. You can get it, but you got to go through a little bit of rigmarole to get it. Meaning you got to call in, you got to do verification and things like that. And typically, we tell you not to lose it because that verification is a lot. It's not just a little easy moment as far as getting that. And now we're going to move on from getting your EIN to understanding your business taxes. Now, the IRS points out that there are 5 types of business taxes: income tax, estimated tax, self-employment tax, employment tax, and excise tax. Now, as far as income tax, all businesses except partnerships must file an annual income tax return. Partnerships file an information return. The form you use depends on how your business is organized. Through that structures area is where you see your income. When we looked at it initially, those business structures. So once you get into the to finding out what you have and what your requirements are, that's what you need as far as your income taxes. The federal income tax is set up as a pay as you go system. That means you pay your taxes as you earn or receive income during the year. That's what the purpose of estimated or making deposits are for. You don't want to, if you do not pay your tax through withholding or do not pay enough tax that way, you might have to pay, again, estimated taxes. And if you are not required to make estimated tax payments, you may pay any tax due when you file your tax return for. And then we got a publication 583, and I'm going to talk about that when we get down to the end. But in my slide deck that I sent out, they have links where you can click on all of that. So most of this stuff, other than the screenshots like this, at the end I've got all these publications that have the links to go to for the different publications. So it's available and makes it a little bit easier. The next thing we talk about, like I said before, is estimated tax. In order to pay certain taxes, you have to prepay. Instead of withholding, you do estimated taxes. You must pay your taxes on income, including self-employment tax, by making regular payments of estimated tax during the year. And you can also refer to the estimated taxes on here. It would make it a lot easier if you are able to go in and just pay your estimate. If you have a job that is like you're doing a second job, I usually suggest people get the money withheld if you can. But if you can't, you can pay quarterly. If you want to pay monthly, you can do that too. I'm all for paying your taxes as you go, meaning if you can pay them on a monthly basis, you can. When we get into the part about for businesses, okay, for estimated payments, you can get on our website or online account. And for businesses, you can get on our online account. But you have, for making estimated payments, you can do it that way. For making any other payments like 941 payments, business payments like that, you have to do it through EFTPS, and we're going to talk about that too.
Cheryl, if you are, let's say you're an LLC and you're not taking any draw at all.
Okay.
Do you still file and claim zero on a quarterly basis?
Okay, so
I stop you?
if you're not getting any income throughout that time period,
yeah,
no. Okay. You would do all of your stuff at the end of the year. Okay. So here's the thing. When you're doing the 941s are essential for payroll for your employees. When you're an LLC sole proprietor or whatever, that's why I said if you got somewhere else that you can get it with help from, like say for example your job like a second job, then let them do the work. But if you don't, that's what the estimated payments are for.
Okay.
You go in, if you look at your income and you see, say for example, you get a lump at the beginning of the year, and then you don't get anything until the end of the year, but this income is coming in. Instead of you waiting until the end of the year, you might want to set it up quarterly so you're paying it throughout the year until that end of the year lump hits. And the reason why is because sometimes, although you have the money, when you've been waiting all that time, sometimes you get that money and it's like, oh, I'm gonna pay this, I'm gonna pay that, I'm gonna pay this, and then taxes get last. And then you say, oh well, I can just pay it when I file. And then when you file, you look at it and say, I didn't know it was that high because you didn't take the time to calculate it. So even if you say, okay, well, I'm just going to pay it when I get the money, that's fine. We don't have a problem with that because when you're doing estimated taxes, they have a calculation based on when you receive the money, right? But again, if you know you're going to receive the money and you know that this money is going to hit right before Christmas or whatever,
yeah,
and you also know that there are smaller incomes that are coming in, you might want to do it before you even get to that point. I also tell people, like, when you know you're going to get a big chunk of change, like people get a bonus at the end of the year, um, for their jobs, let them take the taxes out for the bonus. But if you're going to get it and you're self-employed, then you need to go in and do that full calculation, almost like you're doing a tax return, and get it taken care of then, rather than waiting until the returns are due.
Okay.
Because part of the issue with estimated payments is that if you don't pay it, if you owe a certain amount at the end of the year where you didn't make estimated payments, what will happen is you have the possibility of getting a penalty for not making the estimated payments. But if you have a zero, no, you don't have to. So I went around the block, came back again, and landed.
That was a very good answer.
Sarah, my situation is I left my previous job in May, at the end of May. Started up my new business, I got an LLC, I got the EIN. I paid myself draws the last 2 months.
Okay.
And I'm working with QuickBooks. I have an accountant all set up and everything.
Good.
When do the quarterlies hit?
April, June, September. Did I do that? That was my face, right? April, June, September. So if you did it the last 2 months, then it would be September.
September. Okay.
Mhm.
And how would is it
It's a 1040 ES.
10? Yes.
And your accountant, and this is why I love a good accountant. They will sit back and you're sitting there thinking, okay, everything's good, woo, woo. And then they're gonna send you a statement and say, oh, by the way, you gotta make these payments.
Okay.
So they're probably gonna do it, but if you don't get anything, if they are not saying anything by September the 1st, because I think it's September what was it, the 15th or the 30th? I can't remember. Let me think. Was something April 15th? It's gotta be the 15th, because the 30th is the one for the 941s and I did it again, then I zoned out.
So it's the 15th of the month following the end of the quarter.
Yes,
So it's
Because-
April.
April 15th is the
Okay.
deadline for the first one, because it coincides with the
Yeah,
1040 return.
right.
And then
got it.
June is the next one, and then September, and then January 15th for the last one. And 30th is, I always throw the 30th because those are how the 941s are due. The 941s are due at the 30th of each month. I mean, of the month that they're due. So they're quarterly, but theirs comes in, it's March, so it's April 30th, January to March, and then it's April 30th, 1 month after the end of the quarter.
Mhm.
And then it's
July.
July,
Sorry.
and then July, and then October, and then again January, the 31st. So
And is the taxable income is what I'm drawing, or is it overall what I'm brought into the account?
okay, the taxable income is going to come from they're gonna look at I think it's gonna look at the draws for that period. And then, you also, because at the end of the year, you're gonna end up coming up with those draws that you're doing.
Mhm.
And then you're gonna have to take into account your other expenses. And that's how it's gonna kind of wash itself out.
Right,
But
they've already
things-
told me to categorize what I've been putting into the business as a separate thing, that at the end of the year, that they'll look at that.
Exactly, and that's how they're gonna come up with it. It may be that you overpay, but that's okay. It's better to overpay than to
Right.
underpay
Okay.
from our perspective. Now, a lot of people say that, that if you owe, that means you're doing well, but the thing is that it's not about owing, you're gonna owe, but it's about paying on time and paying throughout the year, so it doesn't hit you as bad at the end of the year.
Okay. So I'll contact my, about that, just so I'm on the same page. Good to know.
And let's see, okay, so so we did estimated taxes, and we're gonna talk about self-employment tax, because self-employment tax is the part that is considered Social Security and Medicare. That is the part of the tax that is primarily for individuals who work for themselves. Your payments of self-employment tax contribute to your coverage under Social Security, and your Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance, which is the Medicare. So one of the things that a lot of people are look at is that they try to get their tax as low as possible. That's good, but you also have to understand that when the lower it is, the less money you're putting into Social Security. You're ultimately, when you're doing that self-employment tax, you're going to want to look at, okay, how much of that is going towards your retirement, because that's a part of your retirement. But get a 401k, just get out of the plan, an IRA, 401k, whatever you want to do. Get something, get yourself another retirement vehicle as well, but that is going to contribute to it. And also contributing to having Medicare. You want Medicare at the end of the day. You want that to go along with anything else. You want it. So another thing is you work for a church or a qualified church controlled organization, other than a minister or member of a religious order that elected an exemption from Social Security or Medicare taxes. You are subject to self-employment tax if you receive $108.26 or more in wages from that organization. So even though you may not do self-employment tax, you're working for someone. If you were working for a church organization or something like that, that comes in a little bit different, because you may end up having to pay your own self-employment tax because they're exempt from it. And I had to learn that pretty quick, because when I was going out, there's certain things like unemployment tax that are not on for churches. A lot of churches, when you look at it, they don't have that requirement, but they do have 941 requirement. But even though they have the 941 requirement, which that's where, so when you have an employee, you're now paying their Social Security and Medicare taxes. So when you have an employee, you're going in and taking that money out and paying for them, and they're filling out a W-4 and asking you to take out that money. So when you get to that point of when you have employees, so that's the good part of operating a business. You have to be really careful about having employees, though, because when they ask you and they fill out that W-4, they're asking you to hold that money. You have to make sure you send that money off, because what happens is, although you have protections, each outside of partnerships and sole proprietorships, you have certain protections as an LLC, and you have certain protections as a corporation. What it does not protect you from is the trust fund. Trust fund is the portion of the taxes that are withheld from your employees' pay. That is considered money that they wanted you to hold over to give to the Internal Revenue Service. If you do not pay self-employment taxes for them, meaning their Social Security, Medicare, and all of that stuff that they had withheld from their pay, then you are considered to be to possibly having a trust fund penalty on you. That's when you get deeper into having employees and things like that. But if you have employees, you're going to want to know that, because if something happens with your business, a lot of times what people will do is the first thing they do is say, oh, well, this money was taken, but I can't afford to pay that. Well, what can happen is you can be personally held liable for that. So they can assess a penalty against you personally, and where it's almost like a regular tax balance. So you're going out there, you're working, you're doing that thing. That's why I always say, get somebody that is prepared, that knows their stuff, because you know your stuff. You know your graphic design all day. You can tell them how to do it, how to post it up, how to make it pretty and everything. But as far as the tax part of it is concerned, you may not know all the rules. And I tell you, you don't have to know all the rules. You just need to know enough to cover yourself. If you go out there and you have employees and you say, oh, well, I don't have it to pay them. What happens is it again come back on you, and you can end up where you owe a balance for something that could have been avoided early on. And they assess it against you, like I said, like it's a 1040 tax. And you're like, well, where did I get this lien? I always paid my taxes. No, it's from the business. Although you were protected, that's one thing you can't be protected from. Now, next thing is, we went to Social Security, self-employment, now the employment taxes. We pretty much covered that. They must be deposited on a timely basis. When you have employees, you are the employer. You as the employer have certain employment taxes that you must pay and forms you must file. Social Security and Medicare taxes, the employee has their half, you have your half. Um, what is it? The federal tax, income tax withholding, the employee, it should come out of the employee's pay so that they're paying all of that, but that's their portion. And then the federal unemployment tax is you're paying that yourself in full. So that's all you. And that's what we have for employment taxes. And then we cover excise taxes, which depends on manufacture or sell products, operate certain kinds of businesses using various kinds of equipment, facilities, or products, or receive payment for certain services. When you're dealing with excise taxes, you look at things like people that have big trucks and stuff like that. That's where I think of it as. So now we're going to move on to the allergies acting up. Good job. Okay, so I talked about the estimated taxes and we kind of covered that some, went into everything, but just as a note, we have a certain area of publication that we deal with, publication 505, that's our tax withholding and estimated tax publication. And we talk about who must pay estimated taxes. Individuals, sole proprietors, partnerships, and S corporations typically have to pay estimated taxes if they owe over $1,000 or more, and corporations if they owe over $500 or more. And when you get into the LLCs, they fall in line with each LLC can possibly be a single member LLC. It can be designated as a corporation, or it can be designated as a partnership. So that's how LLCs fall in line with that. So okay, and then for estimated payments, you do a 1040 ES for personal and for sole proprietorships and things like that. And then 1120 W for corporations. So that's the only real difference in those. And see, I'm gonna go over. Okay, and we're gonna slide through the now we were talking about the employment taxes before, and I kind of covered that a little bit more thoroughly already. So if you're self-employed, you can always visit our self-employed individuals tax center page. So you would, in the search button, you would just type in self-employed individuals, and it'll pull up that tax center. We also talked about what our what our employment taxes are. And we didn't really get into depositing and reporting your employment taxes. You have to deposit federal income tax withheld and both employer and employee Social Security and Medicare taxes. You would, and we're going to get into the EFTPS later, but that's what you would have to do as far as depositing your payments throughout the year. We have to e-file our employment tax forms, and we have different employment tax due dates. You must deposit and report your employment taxes on time, correcting your employment taxes. So we have different X forms and things like that for correcting so if there's an error, usually your accountant will do all of that, but you have to know that there is a form that is any correction is an X form. When you amend your taxes, is a 1040X, your personal. If you're amending or correcting your 941s, it's a 941X. So it's an X for any form that you're doing a correction on. And we're going to talk about a little bit about, okay, so you can also have a payroll service provider. Now, a payroll service provider can provide, is a third party provider. It's like you outsourcing your payroll, and the third party payroll provider will administer the payroll and employment taxes, provide assistance in meeting filing deadlines and deposit requirements, and streamline your business operations. A lot of times, once you get into having more than a couple of employees, you want to start looking at something like that. They can take care of everything, but the thing is, as the employer, you're still responsible. So if anything happens, if they come to you and ask you to make a payment and you don't make it, then it falls back on you, not them. But you also have to keep your eye on them to make sure that you're knowing what you need to have available so that, okay, they're sending me these forms, they're sending me this, and most of the time they should talk to you about that when you set yourself up with one of those. Like I said, when you get into certain, like you feel like, okay, this is a lot because you want to do the graphic design. You don't want to be over here messing with this all day. And that's why they have these jobs because they will mess around with that all day. Once you get into doing that, it can turn into a lot. So that's why we point out what they are able to do for you. Um, when you have a third party arrangement, you can designate or enter into an agreement with a third party in which the third party agrees to take over some or all of the federal employment tax withholding, reporting, and payment responsibilities. One of the most common is a payroll service provider. And we actually work with those. I work with those as well because they have information and questions that they need as well. So but they do provide an awesome service when it comes to making sure that your payroll is taken care of because that's a big deal. Now we get into record keeping, and record keeping can turn into everything else you need to know. If you want to have a good business, you got to keep good records. So you want to use the good records that can help you monitor your business activity, help you prepare financial statements. Like if you got to go to the bank and get something, if you've got your records already in order, then you don't have to do a lot of digging and things like that. It help you identify receipt sources. So in case you're trying to figure out, okay, well, what's going good and what's going bad. Having good records will let you know, okay, so I've been getting income from this company and I've been making sure that I've paid or had all of this taken care of. And so as far as the business is concerned, I have everything that I need. I know what I know what is coming in and where it's coming in from. And I know that I should focus on that because that's where most of the money is coming from. So having those resources and tracking your expenses and preparing tax returns, all of that is a good part of record keeping. So we also have what kind of time frames we're looking at for our record keeping. You want to maintain your records and you want to keep your records dependent on the action, expense, or event. Periods of limitations that are for record keeping. You keep your records for 3 years if certain situations, 4, 5, and 6, do not apply. I'm going to get to 4, 5, and 6, but we're going to get started. Most of the time, it's 3 years. And you keep your records for 3 years from the date you filed your original return or 2 years from the date you pay your tax, whichever is later. If you file a claim for credit or refund after you file your return. So 3 years from the date it's due and 2 years from the date it's paid. You keep your records for 7 years if you file a claim for a loss from a worthless security or bad debt deduction. You keep records for 6 years if you do not report income that you should report, and if it is more than 25% of your gross income shown on your return. And you keep your records indefinitely if you don't file a return or if you have filed a fraudulent return. And you keep employment tax records for at least 4 years after the date that the tax became due or is paid, whichever is later. And when you're looking at your returns, you also want to look at what are the records connected to property. Like say for example, the purchase of a piece of property, a car, or something like that that you're depreciating. That might change your mind about how long you want to keep it because you may want to keep it longer based on that. You also want to know if you receive the property in a non-taxable exchange. Your basis in that property may be like, say, for example, you have to sell the property later on. You want to know what kind of basis you had in the property, what you paid for that property, or what the value of that property was for. And sometimes you want to keep your records for non-tax purposes. Like, say, for example, your bank may want you to keep your records longer. So, say, for example, your bank comes back and says, "Oh, we would need something from 10 years ago." You want to ask them before you start throwing away stuff, how long should I keep this? Your bank will tell you, you know, but the IRS's standard may be different from their standard. Okay. Now, okay, so we're gonna go ahead and move on from that. We're gonna talk about business, income, expenses, record keeping. You may choose any record keeping system that suited to your business. A lot of people ask, what should I use this software, that software? We do not suggest any software. We're just telling you that you need to find a software that works well for your company. Some people love QuickBooks. Some people love just using an Excel program that they created in-house. Is what works for you. As long as it keeps those records and keeps them up to date, that's all you're looking for. And it also, the type of business you have may affect what type of records you keep. Okay, so we're gonna move on. And we're also looking at, all right, so we talked about the record keeping system. What are some of the record keeping items that you would need? For a small business, you might have your business checkbook. That's just basic. Daily and monthly summary of cash receipts, check disbursements or journal, depreciation worksheet, employee compensation records. Those are basic records that you want to keep for your business, especially if you have a smaller business. All of these items might be in paper form, but as you grow bigger, you might want to keep all of that on your computer. And I know for myself, most of my stuff is on the computer anyway. It's just easier to track it and all that good stuff. And when we get to electronic records, all requirements that apply to hard copy books and records also apply to business records, which are maintained using electronic accounting software, point of sale software, financial software, or any other electronic records. Electronic systems must provide a complete and accurate record of your data that is accessible to the IRS. Sometimes we get information in, and I was talking to one of my girlfriends today, she still is in collections, and she was like, I got I got what is it, a disk drive, a drive. I said, oh, you got to scan it first and you got to do this. We have to do certain things, but as long as you have the records, we're good with it. We just want to see it. So as long as it's available to us, that's what we want to see. So, and as long as you can keep it and maintain it, all that matters. And make sure that you're keeping it up to date and regular. One of the main things people do that hinders them from creating good records is they hold off and they procrastinate. Keep your records up to date. Typically over a week's time. Some people just do it every Friday. They go in and update their records and make sure everything's up to date. Some people are more sticky and they'll go in and say, I need to do it every single day. And that's good. Good for you. As long as it's up to date, I would not hold off and keeping any records for 30 days because you're going to forget something. So 1 week is good enough. And these are some of the rules that we established to ensure that your business checkbook is up to date. Establish separate business accounts, reconcile your accounts regularly, like I said, retain deposit information and receipts, and use business account for all business transactions. That's the best way you can do it as far as getting that checkbook in order. And we're going to move on to what documents to support your gross receipts. They would be cash register tapes, bank deposits, receipt books, invoices, credit card charge slips, and forms 1099 miscellaneous. These are income you receive from your business. You should keep supporting documentation that shows the amounts and sources of your gross receipts, and those will be samples of that. And then we move forward to supporting businesses, documents and purchases. We have canceled checks, cash register tape receipts, credit cards, sales slips, and invoices for any purchases that you made for your business to buy and resell to your customers. If you manufacture or produce or are a producer, this includes the cost of all raw materials or parts purchased for manufacture into finished products. If you're writing all day, if you're drawing, if you got pens, ink, whatever, you need receipts for all of your stuff. Exactly. So, and for your expenses, you have canceled checks, cash register, tape receipts, account statements, credit card receipts, and statements and invoices. Expenses are the costs you incur other than the purchases to carry on your business. Your reporting documents should identify the payee, the amount paid, proof of payment, the date incurred, and include a description of the item purchased or service received that shows the amount was for a purchase for a business expense. So that'll help as far as maintaining and what you need to show if you are showing expenses. Your assets are the properties such as machinery and furniture that you own and use in your business. You must keep records to verify certain information about your business assets. You need records to compute the annual depreciation and the gain or loss when you sell the assets. Documents for assets should show your purchase price, cost of improvements, deductions taken for depreciation, deductions taken for casualty, use, disposition, selling price, and the sale expense. And we're also going to get into, um, oh, and another thing, some documents may show information like purchases and sales invoice, real estate, state closing statements, canceled checks, and other documents for that proof of those assets and the expenses for those assets. Now, for operating a business, we've got a whole website on operating a business. We talked about that in the beginning. EIN, record keeping, business change. A lot of the information that I already talked about, we've got that in there. If you have independent contractors that you're paying, you can click on each one of those links and they make it available to you to look at and go over as much information as possible that they have available. And we also talk about your taxable income. We've gone through the operating your business and going through everything from starting your business to operating it. And now we're just at the part of reporting your taxable income. So you can receive income in the form of money, property, or services. What we do is discuss what we have as far as what is taxable income. Most income is taxable unless it is specifically exempted by law. You can receive income in the form of cash, check, credit card, assignment of income, virtual currencies, and non-cash exchanges such as bartering. So those items, a lot of people don't know because they think that if I barter, it's not taxable. Yes, it is. You have to claim it on your side, and the person that you're bartering with has to claim it on theirs. There may be other expenses that you have tied to that, so you also include that when you are reporting the taxable income as well. And like I said, certain things like prepaid income, such as compensation for future services, is generally included in your income in the year you receive it. However, if you use an accrual method of accounting, and that's when you get into talking to your accountant about certain things as far as what is claimed and on your taxes. Now, we have our business tax credits. There are several business tax credits, and I'm going to give you, when you go in, you can always search for business tax credits. You have the general investment credits, American Samoa Economic Development credits, a ton of credits on here. Each one of them has a different requirement around it. My personal suggestion is that talk to your accountant about what would fit for you. It may be that quite a few of them don't fit, but if there's something that would work for you, it can reduce the amount of tax on a dollar for dollar basis. And you can go on like I said, go on our website and search for those business tax credits. And we also talked about protecting your financial and tax records from disaster. There's sometimes you have to, if you've gone in and done all your work, but something happens where your records are destroyed. First of all, you want to try to keep your stuff safe. That's number one. But you have to find out some information on planning what to do in case of a disaster. So we have the following tips on preparing a disaster, taking advantage of paperless record keeping, having stuff online on a cloud versus just on a local computer and things like that. Document your valuables and business equipment, check on fiduciary bonds, continuity of operations planning for business, and continuity operations. Okay, and like I said, we repeated that, I don't know why, but anyway, like I said, we go in and we have a lot of information on our website. Check under disaster and record keeping for disasters, and you can get some information on that as well. And we also have, it says under preparing for disaster for taxes and for a business. Now, when you have a business, you can also roll into errors. Some of the common errors for small businesses is underpaying your estimated taxes, not depositing employment taxes, filing late, and not separating your business and personal expenses. That is a big one, that not separating your business. That's why we talk about having a separate bank account, making sure that your income and your expenses are well documented, and like I said, following the rules, the basic rules that we have. And let's see. We also talk about the tips for choosing a tax preparer. You can always check the preparer's qualifications that the IRS has on our website. The directory for federal tax return preparers with credentials and selected qualifications. We have our enrolled agents on there. You can check the preparer's history. If you know someone, that might be a good way of finding someone. Ask about their service fees. One of the things you have to be aware of is that if they're telling you you're going to get a refund based on you're going to pay them based on the amount of refund they're going to get you, that might not be the right one for you, because typically that's someone that's going to try to boost your refund, but are they doing it legally? So you have to be very wary of things like that. Make sure your preparer is available. Some people are just never available. You want someone that's going to be looking out for you. Ask them about e-filing. Do they e-file? You typically want to e-file. E-filing is the best way to go with it. If you're doing it by paper, you may not want to do that, because what happens is you're relying on the post office, and you're also relying on us. We don't even claim to have our paperwork in order like that. So if you want to do anything, e-file. Never sign a blank return. Provide records and receipts for what you have. Review your return before signing. And that's why I say this is helpful for knowing what you're signing. Review any details about any refund, and report abusive tax preparers to the IRS. The IRS has an area that is reported for abusive taxpayers.
Cheryl, this has been great. Thank you so much.
I know it was about your time. I said, let me
sorry.
up a little bit.
You did great. Thank you.
No
I'll
problem.
be talking to you, Tony.
Oh my goodness. Okay, Tony, we're gonna slide on through, because I want to make sure you're getting what I got. Okay, so I already told you about electronic filing and payment options. So we've got a lot of different resources on our website. Everything you need is on our website, but just so you know, we have online accounts that are available for you to look at, to be able to look at your account. We have them for businesses and personal side. So if you've got a tax ID number, you can register for the business side and the personal side and look at your account. They have transcripts and everything like that. I don't even think I got to that part yet, but we're gonna get there. And for electronic filing, we have our modernized e-file internet program for IRS e-file for businesses. We have approved IRS e-file for business providers, and we use direct deposit for refunds. We have online payment options for debit card, credit card, digital wallets. We have a business payment plans. We can make business payments or schedule estimated payments with the electronic federal tax payment system. Okay, so when I get to this is the part that I kind of slow down on. And the reason why is because EFTPS is so important. If you don't have employees now, this is something that you're going to want to know eventually. And even if you don't have employees, you can pay taxes with this for your personal side too. So it is all the way around good stuff. So EFTPS is the payment system for everything. It is fast, free. It allows you to make payments and securely. And that's the big part of it. Of course, we have our online payment thing. When you go on our website, if you say pay taxes, it'll come up where you can direct debit and pay your taxes on there. You can have them withdraw your payments out. You can pay with credit cards, all of that. EFTPS is another animal because it keeps track of everything. So it's like you have your own system set up for you to track every payment that you send into the IRS. So you feel like, oh, well, I want to make a payment. Okay, you can go on there. Now that you have an account, you can go on there making a payment anytime. And it keeps track of your records. I have had, when I was working with my people, and it gives you a confirmation. I would say, you made your deposits? Say, yeah, I made them. You got documentation of it? Oh, I did let me screenshot it for you. Send me a screenshot. Okay, this payment went through, this payment went through. What's this payment right here? It's not showing. Oh, I didn't even see that. It came back. Yeah, it never, and it also shows you where they're supposed to go. So when you're trying to track payments, because again, when I was working the collection side of the table, I was like, okay, where's the payment? There were payments that were made, applied, and just posted to the wrong periods. I had to go in and move them around because they were like, no, 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 this is supposed to go here. Oh my God, I got you. No worries. So
So the difference is like a one-time payment each time
Yes.
versus having it all through one system.
exactly, and
Yeah.
having it where you can track your own stuff every
Mhm.
time and scheduling your payments. So if you're someone that you know, okay, I want to make estimated payments. I want to do it monthly. Making payments in general is tedious,
Mhm.
but going in and doing it on any other system, okay, I gotta go in and do this and I gotta do. You can go in and just schedule it and say, okay, I want these payments to come out once a month for the next few months. And I think you can do it for up to 365 days in advance. So, and then it's, you can make the payments 24/7, pay your income, employment, estimated and excise taxes. And you can change or cancel them, track your payment with email notification, and you view 15 months of payment history. So it gives you a lot when you're doing it, and it makes it so that you've got everything that you need. You can enroll on there on the website, or you can call, and they've got a couple of telephone numbers up there. Well, that's one of them, but we've got you can visit our EFTPS or call the EFTPS customer service number, and to request an enrollment form, and you can the option to pay through EFTPS, you can do the voice response system, and that's what that is down at the bottom, where you go on the voice response system and you're calling. Because I've had people that would do theirs online, but a lot of people would just call in. Oh, I got to call in and make a payment.
Mhm.
It was just, it makes it easier for whatever you need to do. So now we get to the end and we'll start talk about the other resources that we work with. Of course, you have the IRS, you have the U.S. Patent and Trade Office, SBA, and USA Gov are some of the small business resources that are available. And like I said, I'm gonna send you this presentation. I've sent it to them already, and I think she's gonna send it out to you. So it's
Okay.
got all the stuff you click on, but this one isn't a click on. It just gives you the sources that you can have for that. And I wanted to go over, okay. And the one thing she was asking about, our social media, she came in right at the end. I told her it was in there. I guess it's a good thing I told her about it beforehand. But we have our Small Business Self-Employed Tax Center, and I talked about that early on. And you go in and you can just search for small business self-employment, or you can do irs.gov small biz. And then you have your resources, our e-news. We have our social media. If you go on our irs.gov social media, all of the links are on that one page. So you don't have to go around clicking to Facebook, it's all there. And then we have our video portal, which is down right now. They are updating it. They've been updating it for a little while. That and our tax calendar are both being updated. The tax calendar is really neat because what happens is you can go in and put dates on there and it'll put them on your personal calendar. So you know, if you have 941s due, it'll just load it. But the problem is that they're updating it right now. So we just been praying on that one. And we also have our publications, and I'm gonna get to that in a second. Just to show you the Small Business Self-Employed Tax Center. I went through that earlier And it's the same information, but it's a little bit more organized differently for our small business self-employed tax center. It is business tax credits, deductions, and all of the information on starting and operating a business down at the bottom. And then we have our e-news for small businesses. And that's where you can subscribe to our e-news to get that information.
Okay.
That's what Miss Rosie was looking for. And this is the social media. I kind of went through it already, but this is the social media page where you can go in and click on all the good stuff that's on there. And then the video portal that I was talking about, eventually that will be back as well. And we have on that video portal is a small business tax workshop where they have 8 lessons where they're already there, they're already set up, where you go through and you have federal taxes, Schedule C, different things. The only issue with that is, like I said, it is on the video portal. We're working on it. But in the meantime, we have our YouTube page, and our YouTube page has some of our videos as well.
Okay.
And then I talked about the online tax calendar, and this is the end. After we did the tax calendar, because like I said, let me go back to the tax calendar. The tax calendar has the reminders. You can subscribe to or import your calendar program and all the information that you need. But I think what it is, because they're trying to get it more interactive,
Okay.
and that's where they're trying to work on that. So we're trying to step into the 90s.
Always changing.
We're trying to step into the 90s. I ain't say 2000s. I said the 90s. We're still
Always
20
changing.
years behind.
Right.
And these are the publications: the 115 Farmer's Tax Guide, the Tax Guide for Small Businesses, and the Travel and Entertainment, and publication 525 for non-taxable and taxable income. And then we have our other ones that were the Guide to Small Business, the 5557, the 58583 for starting and keeping a business and keeping records. All of that information available on our website. We've got all those publications, and some of you can order via paper. So that's good. And then that's me. At the end, my friend. And did you have any questions for me? Because I know I gave you a gang of information. What my cousin said, say it again.